It's the start of a beautiful day in Frankfurt, but the markets have been volatile and there's an air of insecurity here. These cathedrals of finance look solid, but what's going on inside? What do bankers say about Greece and their own dealings?
It's not good. We can't quite assess the situation yet. We'll see. They say it's under control.
What they say is under control is the risk of Greek government bonds, and German banks are highly exposed. Bonds were traditionally a very safe investment, but now the banks fear they've lost their money.
They're junk bonds. They have to withstand depreciation of between 40 and 70%. And if they lose so much value in such a short time, then they're junk bonds.
Many banks have already tried to offload their Greek bonds by selling them to the European Central Bank, for example. Those who've held onto them will have to write off the decline in their values. The European Central Bank has now bought up bonds from Greece and other troubled Eurozone economies to the tune of 150 billion euros. With the Eurozone in dire straits, the ECB is fighting to maintain some stability, not least because of the mutual distrust among banks. Normally, they lend money to each other. But in a climate where no bank is considered safe, they prefer to do business with the ECB, although it pays a lower interest. And that insecurity extends to investors. With the euro crisis still ongoing, they're wary of investing in banking stocks. As a result, those shares have plummeted and decreased by a third since January. Exactly how the current crisis will pan out, nobody seems to know.
The fact is that if Greece defaults, the situation will be out of control. We won't know what comes next. We could be in a situation that makes Lehman look relatively harmless.
The collapse of Lehmann Brothers 3 years ago was followed by a worldwide recession. Is there any way of escaping the next wave of the financial crisis?